The idea behind this panel is that we're here in the free state of Florida, one of the places where you're getting a lot of anti-ESG sentiment expressed by politicians. In our case here, it's our governor. Across the country, it's some other governors, but also managers of state pensions and so on. So I quickly wanted to bring in Mark Grothe to this conversation and ask, Mark, does this impact your job or your life in any way? How is all this negative ESG sentiment, affecting you, if at all?
Yeah, well, as I've described on the other panels, I'm in a specific team in Glass Lewis, the M&A and contested situations team, and I guess the easiest way to say it from my perspective, my desk is, we're still driven by what's in the best interests of shareholders. That's at the end of every single one of our recommendations. So in terms of ESG factors.
Just maybe grab the other one.
Sorry.
No, there you go. Just don't touch the bottom.
Got it. Sorry. You think I would know by now? Doing it again. In terms of ESG considerations and all that, as I think was apparent, in the situation that I worked on that's been mentioned, Exxon, and I think it's kind of the consensus understanding now, more than a year on, that what that campaign was really about was about the economic substance of Exxon's business model, and regardless of the ESG slant and ESG factors that did play a part, it was ultimately driven by enhancing value for shareholders over the long term, and what the board should look like going forward, and what potential deficiencies need to be addressed. So, from the outside, I think you look at a proxy advisor, and you think ESG and they're proponents of ESG. Well, that's definitely true to an extent. We're big shareholder advocates. The G in governance, that doesn't seem to be super controversial. 20 years on plus from Enron and all the governance scandals, everyone seems to accept that pretty widely. So in that regard, we are. I think the more recent pushback is where maybe it went a little bit overboard in certain areas. But on a day-to-day, for where I sit, we're still driven by shareholder primacy and by economic value, which jives with some of the more recent criticisms that people have had on just throwing at ESG just kind of on a general basis. I think if you pop the hood on our research and our process and what drives our recommendations, you'd find a little bit more alignment with some of the critics.
And just to give one example quickly, and then we're going to scoot along to Michael. Tell us about this situation with Woodside and BHP, which I think really demonstrates where you guys stand on this. Yeah,
so Woodside and BHP are two Australian companies. A few years ago now, I think, is when BHP, maybe it was a year and a half, announced plans to fully divest their petroleum assets, largely for ESG reasons. And Woodside was the buyer, so they're really doubling down in buying these assets, and they'll be the largest petroleum focused company in Australia. So that transaction finally went to vote. I happened to write our recommendation on that. We supported the transaction. Now 6 months on, or whatever it's been, the states who are filed, the attorney generals filed the letter to both ISS and to Glass Lewis, and I found it interesting that they used that specific example as a criticism. Our report on the Woodside Petroleum part as sort of an example of how we're prioritizing ESG factors over economic factors. And the way they did that was they looked at our recommendation on Woodside's climate report, which was a non-binding advisory recommendation that we see, with European companies, with Australian companies. You're seeing it now with U.S. companies. So we have a separate ESG-focused team who understand the environmental and the science and all that, or whatever the issue of the day is. They do a lot of work there, and for that proposal, we did recommend an against recommendation in terms of accepting their climate report. for reasons that generally were that it didn't align fully or as much as we would like with, say, like Paris alignment goals or things like that. So the way I think the ESG views those recommendations is to say, okay, this is an advisory vote. A for vote is saying, everything's great. An against vote is not necessarily you're completely off base here or whatever. You need to adopt even more. But just, there's some areas that we see improvements. So it seemed the Attorney General's grabbed onto that as an example. And I just found it ironic because, the first proposal on that agenda for that meeting was, should Woodside be buying these petroleum assets from BHP, which we gave a wholehearted endorsement of based on business factors, economic value. We even made the point that Woodside was probably getting these assets on the cheap because BHP was motivated to sell them not for business purposes but for ESG reasons. So, and especially the way the commodity markets developed post-announcement, it looks like a fantastic deal really for Woodside. And that recommendation was driven entirely by what is in the best interest of Woodside shareholders in terms of value and economics of the business, which somehow is also the main criticism of the Attorney Generals in their letter and using this one specific situation. So I found that pretty ironic, and I think it just goes to show that there's a lot of kind of nuance, and ESG's been really used as a kind of a political football with people attaching whatever they want to it, whatever serves their interest for whatever situation, even when the facts in this one case in the same report, kind of counterbalanced all of that.
Totally. All right. Well, Michael, so for those of you who don't know Michael, he's had a long, illustrious career in Washington. He was the chief spokesman for the SEC. Michael, what do you make of all this? We've got a lot of noise about woke ESG funds, and we're going to take our money away. In some cases, they have. Just give us your take.
Yeah, you bet they have. And before we get started, I just let you know I'm from Washington. I'm here to help. And look, everything that has been said so far is exactly right, and it's part of the solution and part of the analysis, but it's not the only part. And the part that matters, at least from a headline risk perspective and potentially a substantive perspective, is the political reality of it. There is everything we have talked about here today, without exception, has Washington can affect, for good or ill. They can get in the way or they can help you. They can fund it or they can throw up roadblocks. With respect to ESG, let me just share with you a quote that is from last week from Patrick McHenry, the newly elected chairman of the House Financial Services Committee, with respect to setting up a new subcommittee to look at ESG issues, to, quote, combat the threat to our capital markets posed by those on the far left pursuing environmental, social, and governance proposals. Doesn't leave a lot of gray area, does it? Right? So the political reality at the federal level and at the state level is that ESG issues have become a proxy, no pun intended, have become a proxy for woke capitalism. The other piece of this equation, and it's an important development and it's a recent development, is that historically Republicans could be relied on in Washington as friends of big business, whether it's finance, whether it's energy, whether it's transportation, whether it's pharma. That is no longer the case. For example, House Speaker McCarthy, Leader Scalise, both have said just this week that they will not take any meetings with the Chamber of Commerce. Chamber of Commerce being the largest spender on lobbying in Washington year after year after year. So there is an odd coalition developing between part of the Republican Party and the far left. There are those who think ESG goes too far. There are those who it doesn't go far enough. But for organizations that want to pursue an ESG agenda, it's going to take a lot of deft navigation to get through it. And happy to talk more about that.
All right, great. Now, I want to make sure that we're going to run about 5 minutes over to give Patrick Orlando enough time. Sorry about that, everyone, but we got to do it. Any last thoughts on this? Can you tell, advice for companies, how to navigate this?
For sure. ESG is not a label, it's substance. And if you're an organization, irrespective of the industry you're in, you need to really explain and detail the value that your adoption of ESG is going to bring. It's going to bring in the short term, going to bring in the medium term, going to bring in the long term to all of your constituents. The quickest way to get in trouble in Washington and or in state capitals is to be seen as simply carrying the banner with no substance behind it. And that means talking about not just financial returns, but all the kind of things that you do as an organization. Hiring, taxes, technology, research and development, market ascendancy. All of those issues are going to accrue to you as an organization. Final point, I want to move this along. I will be around later. I'll buy you a drink on John, of course. Is that there's a three-part model for how you do this. The first is political intelligence. The second is engagement on the outside, that is through communications, third-party advocacy, and the third is direct communications or lobbying. And as you think about how you want to engage, you need to really look at that mosaic and pursue all three of those. You can't just take one of those pieces and discard the other two.
Mark,
yeah, maybe
thought?
Just a last point too for me. I should say, I'm punching a bit above my pay grade here in terms of pushing back or talking about Glass Lewis's views as a firm on ESG and the pushback to ESG. So for anyone who is more interested in kind of the first official firm stance, we put out a response letter to the Attorney General on January 31, as well as ISS, where we really try to make the points that number one, we're issuing voting recommendations to our clients who are the asset managers who have certain agendas that we try to follow, help along, and also try to we offer a number of different voting policies, benchmark voting policies, custom voting policies in terms of how our clients ultimately vote on many of these, quote, ESG issues and proposals. One kind of final point too, I would just say, in sort of, I guess, defense of those of proxy advisors and to those who might allege that we're looking past the importance of shareholder value and economic value. The head of our ESG team, I think strikes that balance pretty well in terms of looking at the cost and benefit of certain proposals, even on shareholder proposals. So there's data going back 5 or 6 years that I think shows that our support level for those proposals are somewhere in the neighborhood of 40 to 50%. And I think that's reflective of really trying to weigh the balance of cost and benefit and keeping an emphasis on shareholder value, and that's really what's ultimately going to drive all of our recommendations, not even the ones just in my team, but on the ESG team, on the general governance team, because ultimately that's who our clients are. And just as a comparison, and not to take a dig at our competitor, but I think just for the relative comparison, ISS's percentage on that has been upwards of 80% or more of those types of shareholder proposals. So I think it's important that that there's nuance there. There's difference between proxy advisors. There's difference between our clients. There's difference between policies, and I think this all gets sorted out when everyone agrees to kind of just stop calling ESG, items ESG for whatever purpose they want at that time.
All right, great. Thank you, gentlemen. That was terrific. And as I just said, they can meet you at a cocktails in just a few minutes if you want to follow up. Patrick and Ramy co-MVP.